Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is, what day? It's the 20th. Hey, oh, you know what? I still have the camera messed up from when we were with the kid. Let's fix that, shall we? How about that? Well, it'll have to do for now. Hey, we're just gonna have fun. I'm gonna be off today. I'm just warning you right now. I feel so off. I did not get a well-rested weekend. So we're just gonna have fun. We are gonna deal with this. We're gonna have to deal with this thing over here. This our swing trade. We want to be in forever. Well, it's not going so well. So what happened? Let's go look. Okay, well, over the weekend, Mr. Manchin said that he is not going to vote on the president's Build Back Better agenda. And the Goldman Sachs analyst said, well, our base case was that was going to pass. Now, why that was their base case, I cannot for the life of me. Really? Are you for real? You guys really thought this was going to pass? What? But it is what it is. So here, we had a little bit of a rise on Friday, came back, and now we're getting a little bit of a rise again because of Build Back Better. And I still say that we should be down at like 130. Okay, well, whatever. No big deal. And here you can see in the S&P 500. Okay, so S&P 500 did not do super hot on Friday. And I think a lot of this has to do with Omicron and all that. So you need to... I can't even remember what it was on Friday that was so awful, but what this specific headline was. But this one should definitely be, let's come in here and drawing tools, event. I'll put it, I don't really know where it would be, so I'm just going to put it right here. Doom, doom, doom. Okay, so that's where we're at. All right. Note, but also still the yield curve slightly steeper. So that's very different from what it's been, right? Oil. Well, we need to refresh our oil, but oil a little bit lower now because of all of that. Also, Omicron variant concerns, natural gas spiking up. So energy costs in Europe are going up. Natural gas hasn't recovered to its previous levels, though. So I don't know. Is Europe gonna escape disaster there? So far, it seems like yes. Then we come over to the metals, gold and silver. Gold and silver doing pretty well on Friday with the options expiration and all that. But so we're still just kind of coming back into can we break out from here kind of levels, right? So that's not a done deal, but gold and silver definitely looks way better than they used to. And then GABA struggling a little bit overnight, as is everything with the global concerns. And then we got to come over here to the Bitcoins. So the Bitcoins had a drop below 4,600 on Friday, and then it bounced back up. Remember that this was back from the Federal Reserve meeting and all that. So they survived the weekend, though, I have to say. The bad thing happened before the weekend, and then they were just kind of done. It's just kind of going sideways now. It doesn't look great, but it wasn't like a complete disaster. We gotta have to keep an eye on that one, though. And then the dollar is strengthening back up to 96.4. Not quite as strong as it was at times last week, but pretty strong. So That is basically where we're at. So I'm going to be super tempted to trade this today, and I am just not in the position to do so. I just did not rest well over the weekend. Kind of messed up with my Strattera medication. I feel very good this morning. So don't let me do anything dumb, yeah? We can just mess around on sim over here. I'm kind of sitting here wondering, like, should I be taking some contracts up in here? Trying to bring my cost bases up? I could potentially. Remember, we're going to give ourselves $10,000 of risk on this trade, so... By the way, they're kind of pushing down to the downside. Now, let's just come in here real quick. We don't have any news or anything like that coming up here, do we? Well, I don't have anything on the calendar in financial juice. Let's just look at the week. Woo, I feel a little dizzy. Okay. Well, we're going to get final GDP and consumer confidence on Wednesday, and then PCE price index on Thursday, which I believe will be a shortened day, will it not? And then on Friday, we get the bank holiday with Christmas on Saturday. So it actually is a fairly news-packed week, but not today. All we got today is CB leading index at 10 o'clock Eastern time, so... Well, Seems like maybe I could mess with it. I don't know. They opened up higher and everything, but I don't know. Like when I look at this chart, it kind of doesn't look like actually much of a thing. Yeah, in fact, the cumulative deltas on the upside weren't all that extreme either. So I think we got to be skeptical about that. Well, anyways, and by the way, good morning, TLA, Keller, Captain Price. You remember Black Friday sell-offs? Well, I mean, you're probably remembering 2018, right? It usually gets pretty quiet from here. After the Federal Reserve meeting, it's usually pretty quiet. Now we do have some significant news, so it won't be completely dead this week, but it's definitely going to be different. Now, today is different because today we've got to deal with options expiration and whatever that entails for us today, right? Oh, yeah. The options expiration on Friday was like massive. So... all right, let's fix this camera a little bit here. That looks a little bit better. Maybe just a little... oops. Just a little bit over like that. I think we're good. I think we're good. I want to mess with my microphone today too. Somebody showing, because one of the problems I've had is like trying to get the microphone settings right, and they're like, just record yourself and then play yourself back through another channel and then apply those same settings to your microphone channel. I was like, oh, why didn't I think of that? Well, they're kind of hanging out there on the lows in the treasury. I kind of feel like I could. I kind of feel like I could maybe add a contract. Let me close that one. I need to open up this one. So we have, how many? We have 3 on. Like, we could add way more than that. Like, we could add 2. But we also kind of got to keep an eye out on a spike up. But I tell you what, here's the thing that I'm still like, even at this very moment, I'm just like, what? How? What the what? Huh? Is just the they thought that Build Back Better was gonna pass? How did they think? Did anybody here in chat think that Build Back Better was gonna pass before the end of the year? Or that it was gonna pass ever? Because it seems to me like a wish list of Democrat pipe dreams that there is absolutely no way anyone fiscally responsible would ever vote for. And there's no way that Sienma and Manchin would vote for it, and it was crazy for them to think that they would. And I'm just sitting here, and the base case was that was going to pass? What? I can't... Okay, so that's a little interesting. I'll add one there. Ainsley, hello, sir. How are you? I got still things a little off. That's a little better. How is he a snake? Like, this is let me tell you what, man, my man. Here's how you know. Here's how you know what's going on in the politics, okay? Look at what the Democrats are upset about. That's what they're going to be losing on, okay? So if they're really upset about Senator Manchin, it has nothing to do with him being a corrupt piece of shit, or he is taking donations from some group of people that he shouldn't, or anything like that. The only reason that they don't like him is because he's not going along with the thing that they want to do, okay? You can do this with just like things overall. Have you noticed that Democrats are all super concerned about democracy is in peril, and there could be, because of the January 6th thing, it could just get worse, and our democracy is in peril? You know why they're all saying that stuff? Because they know they're going to lose the next election. Come on. Yeah, dude, seriously, so just step back for a second. Just ignore the political donations and all of that, okay? Joe Manchin is a Democrat in West effing Virginia, okay? If he voted for that bill, he would be finished. There is no way that he would be able to go back to West Virginia and get elected after that. No way in any timeline. No way in any timeline. You guys realize that Joe Manchin, among the members of his district, has a 60% approval rating? 60%. Huh? It's not just that he is engaged in some unlawful activity. Because he says he couldn't explain the policy proposals to West Virginians. Yeah. No, the policy proposals are not popular in West Virginia. So that is a gross deception. Okay, so here's how they do those social polls. They say, would you like to receive more money every month? And then they say, well, of course I would love to see more money every month. And then they say, see, they support the policy. But as soon as you attach a price tag to those policies, the support drops. So that's the way that they do it. It's just like, think about it, you're taking the survey. Well, would you like to receive $1 million every month? And you would be like, sure, I'd love to receive $1 million every month. And then the next question that they'll ask you is, okay, but if it added $1 quadrillion to the federal deficit, would you still want to receive $1 billion every month? And then you go, oh yeah, no, actually that's a bad idea. Let's not do that. That's the way that those polls work. So anytime that you see them say, oh, well, they support this policy or they support that policy, or any individual policies, you should immediately be saying they're manipulating me. Because the question that they should really be asking is, do you support the Build Back Better bill? And I will tell you that support for the Build Back Better bill in West Virginia is probably like, single digits almost. Right. It's not supported. In fact, it's not even like widely supported just among Americans in general, even when you get into the far left areas, because Americans know how much is going to be added to the deficit. It's like, yeah, we would love to have all of these lovely services, but our budget can't support that. And people know it. People know it. I'm just... But it's just really telling to me. Well, it's surprising, but I think telling that how much of a grip the Democrat Party has on its base, that people actually thought this bill was like realistic and could actually pass. Because it's ridiculous. The thing that I think is the most ridiculous is that they keep trying to put immigration reform attached to it, even though the parliamentarian has shot it down like 4 times now. They keep trying to put it in there. Like, what the heck? Democrats hate him? Yeah, of course they hate him, because he's the only responsible person in there that's between us and, the hyperinflation. Like, I'm really concerned about the scenario where so what's happening right now is every time that the S&P 500 goes down, everybody on the treasuries piles into the treasuries, and they're like, well, flight to safety, Powell put, they can't let the markets crash, yada 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 yada. Okay, but if we get to a point where we are having inflation and it's really starting to become persistent, which is basically where we're at, and even though they've told us that it was persistent, I think there's a lot of evidence now that suggests that it's not as persistent as as short-lived as we thought it was, right? Okay, then you're eventually going to run into a situation where you're getting an economic slowdown and the Federal Reserve has to tighten into it. Like, is just... That's an ugly setup, right? Yeah, it shows how much people can be persuaded to go against their own interests. I think that it's the height of hubris to suppose that you know what is better for people than themselves. I really think it is. This whole thing that it's like, well, if people knew what was good for them, then they would vote for our policies, is just one of those self-placating mantras that people repeat over and over again to try and explain to themselves why their policies aren't actually popular. Meanwhile, they probably will vote to increase the military budget by massive amounts. I don't think y'all understand the position that the United States is in right now. It seems like people don't understand the position the United States is in right now. Granted, the United States military is better funded than any other military on the planet. That is largely because the United States is the sole world superpower. Okay? Without the United States as the sole world superpower, situation looks very different, okay? And what you're getting right now is a very, very aggressive upstart China looking to supplant the United States' place as the world's sole superpower. And it's not just from an economic perspective either. It's from a military perspective too. So the United States, because of its position and particularly because of its Navy, has been able to create a world where we have open supply lines and all of those sorts of things. And China and Russia explicitly want to shut that down. Okay, so if the United States slows down on military spending here, then they're going to be in a hard spot. I mean, you think that the United States government, you don't like the things that they do? Just wait until you're starting to be affected by decisions made by the CCP, right? Yeah, they've got to, if we don't not only increase our spending, but make our military spending much more efficient, because there is so much grift and corruption in the U.S. military complex right now. They are like way overpaying for stuff, and we've got to become way more efficient. This has to happen. All these military contractors making tons of moolah. Like normally I'd be thinking, oh man, military contractors, they're making so much money, man. Maybe I should go and be a military. No, because that can't last. It's got to change, or our society will die, right? Okay, so we've got that military problem, yeah, and then here on this other side, we want to do all of these, wish list things. Like some of the things that they're putting money into in these bills is frankly a little ridiculous. And another thing is giving consumers all of this money. You can see where that's led. It doesn't. Yeah, it creates a lot of economic activity, but it also increases the prices on everything because the supply chain can't handle it. The TLA trader is still in the transitory camp. Well, I do think that a lot of these problems are temporary. But that's only because those stimulative policies all expire if you don't put Build Back Better in, right? Like all the child credits where you get, a payment every month and everything, that's going to go away. By the way, something you guys should make a note of in your flows is that normally we get strong flows coming in January, March from tax returns, right? And there's a high probability that many people that would normally get a large tax return at the end of the year will not be getting it because most of their tax return was coming from kids. And since they're giving the payments for the kids to you every month, so I think a lot of people are going to go in and they're going to do their taxes. Some of them may even owe taxes and they're going to be very surprised. So that is something that I've been seeing coming on the horizon from... Well, my mom, she does, she prepares taxes for people. So that was something that she warned me about. I think that she has a very good concern there. So keep an eye on that. Yes, and then the consumption goes down again. Well, it'll probably go back to being in line with the supply. It should be what it should be, yeah. Which isn't terrible, but it is down from like what it was. I'm not 100% sure how this is all going to turn out because you really do see a situation where valuations are incredibly strained and it kind of looks like they're going to shut the spigot off. Nah, so the supply chain issues are being caused in a large part of the supply chain issues are being created by the stimulus, though. We are importing almost 20% more stuff from other countries simply because consumers had all of this extra money to spend. And that's a large part of what created the supply chain issues. Because once the supply chain becomes constrained because of so much demand, it becomes a lot less efficient. There's usually a lot of slack in the supply chain, and that slack allows them to be efficient. When there's so much stuff coming through, they don't even know what to do with it. We'll connect to the Matrix metaverse and live there. I hope not. Hope not. You know what I miss, guys? I miss games that were just good games. See, you know what I was saying? I'm going to be a little bit different. I'm way more free talking my opinion today, huh? But I just, treasuries are coming back. I probably should be talking a little bit about that because we did come back quite a good little trend there down to 08. So we'll see what happens. But hey, I remember days when you would play a game like Tetris. Tetris is a game, okay? There are games that I call them forever games because these are games that I truly believe people would be playing 1,000 years from now. 1,000 years from now, there will be people playing Tetris, right? You don't have to put gamification or all of these rewards to give people when they play it. The game itself is fun. Sneezing there. Sorry. Tetris Portable was a good device. There you go. Dude, so there's this game called Tetris Effect. It's pretty good. It's an official Tetris game. So it has the official Tetris rules. So it gets complicated. But apparently, like, how long it takes the computer to recognize your input and how long it takes for when you're holding a key down for it to go, okay, he wants to slide all the way to the right, like, matters. And in order for these people to do these super high, fast Tetris runs with the official Tetris rules, they can't just like hold over to the side. They have to just push the buttons really fast so that they're like in line with every frame and stuff in order to be able to do it fast enough. It's like a crazy thing. But so it being an official Tetris game is apparently really important. But it comes with all sorts of really cool rule sets and games that like make it even more interesting and can just occupy hours and hours and hours of your time. It's a good game. And yeah, there's gamification, like you play and you gain experience, and then as you gain experience, you get avatars, but like none of that stuff really matters. You just want to play the game and get new high scores. Like, that is a game that the basis of it is solid and good. But have you seen a game like that in a while? I haven't seen a game like that in years. The last time that I think that a game came out that could potentially be, the base of it was like something that you'll see around forever was maybe like the original Call of Duty, right? Now, everything has to be gamified or have storyline elements in order to keep you going. Like these RPGs or MMOs, it's like if the grind part wasn't there, nobody would play it. Because the actual base of the game is dumb. There's like not a reward for doing the dumb thing, nobody would do it. And so now, what they want to do is they say, hey, we have this lovely technology, VR, and we have this lovely gamification system called social media. Let's combine those together. And I've played a lot of play-to-win games. I'm not excited for it. Do you play CSGO? I've played it from time to time. It's not something that I've really ever gotten into. I'm really not super into these games where it basically becomes what your reflexes. Like Call of Duty and Counter-Strike are very much that. Like, it doesn't take very many shots to kill somebody in Counter-Strike, right? So a lot of it comes down to who clicks first. Not all of it. In CSGO, it's not that extreme, but a lot of it comes down to who clicks first. And especially since all of the weapons are hit scan weapons. See, here we're talking about games. I always played Unreal Tournament. Unreal Tournament 2003 was my favorite game. But nobody likes that game. Especially like the Rocket Arena mods, where you could like and they had this fast weapon switch, so that if you switch between the rocket launcher and the lightning gun, which is like railgun in Quake, you actually would fire faster. So everybody was always switching weapons all the time. I thought that was so much fun. Nobody else thinks it's fun because apparently like that takes skill and that's too hard. So nobody wants to play skill-based games anymore, it feels like. I'm kind of hoping these guys, what is the name of this dude called? Frost Giant, I think. You know, like they made StarCraft 2 basically, and they're gonna make a new strategy game, and I hope that it will be a very much a micro tactics strong strategy game like Brood War was, and that will be a high skill game, and maybe people will be interested in high skill games again. I can only hope. Actually, you know what though? There is a high skill game that's been introduced in recent years. Was Fortnite. I know, right? You're like, Fortnite, ugh. But the whole thing about building the buildings and then to protect yourself and shooting, and that whole game has a very, very high skill cap, and you have to be really good building those structures and everything to even be like competitive. So that requires a lot of skill. It's just the problem is just that the game mechanic seems kind of stupid and lame, and nobody enjoys it. So what you gonna do? Super Smash Brothers, the latest Super Smash Brothers. That's a high skill game. All of the fighting games require so much skill to play. Fighting games, that's like to the point where it's like almost not fun. Because you're like not even competitive at the basic levels. Whereas like in Quake, you could run around on a pump server and have a little bit of fun still. But I digress. As it pertains to the economy, this whole metaverse thing is basically gamifying virtual reality, and I'm not excited about it like everybody else seems to be. I'm kind of like, they're taking something that maybe could have been cool for some super geeks and they just want to ruin it. Like the guys that are playing VR chat, they're just fine playing their cat girl avatars in virtual clubs. Leave them alone. Leave them alone, guys. Treasury's back up 2 ticks. Pretty good liquidity on the downside too, by the way. And I'm not really seeing like excessive amounts of liquidity stack on the upside. So this move kind of looks like it may be in part driven by market making. It still seems, so we should remember that when you get into the situation where it's like interest rates are going to rise, but we're concerned about the economy and we're getting flows into the treasuries because of flight to safety, the flight to safety flows almost always win. And so that has been the kind of what has driven us up overnight. What we should expect to still see that flow and be worried about that flow. Now, going back to an earlier comment by Jack about Nancy Pelosi. I don't think that she's going to last another term, right? I think she's going to retire. Good morning, Magic. So I have to say here so far this morning, it's been a little bit more quiet than I maybe anticipated for the pre-market action. The treasuries did move down a good amount. I also saw the dollar move down a good amount as probably a big part of it as well. But the 6J did not completely come along, so that kind of gives us a difficult and mixed picture in the treasuries. I don't know if it will continue to come back. What else we got here? We should expect once... When you hear my voice cracking, I'm telling you, I'm not myself this morning. I think that when the S&P 500 opens up, that we will probably get some wild flows. I think that there's going to be a lot of like unclenching and odd flows coming off of that huge options expiration that we just had. You usually see some weird stuff after the options expiration, right? How strong those flows are going to be and what direction they're going to be overall, my own models aren't sophisticated enough to say. I think the most sophisticated I get is that because they sold into it on Friday, maybe they'll buy this morning. But let's see. Yeah, the quiet before the storm. It could be. You say take a test of Friday's low. You mean on with Eurobond? Yeah. I mean, so here in the Treasuries, a test of volume point of control or VWAP would be. Well, we already passed the VWAP, I think, but going for the point of control. Or no, do I have them backwards? Oh, that's a value area. Going for the value area low in the 10-year at 131.04 half seems like a reasonable spot. I say seems. It's a keyword in there, right? Yeah, so now you just remind. So on TikTok, I ran across another video trampling on technical analysis. So of course I had to join in. And I just don't get what the disconnect is with people. So like I said, like the thing that kills technical analysis is that nobody can show like historical numbers. Like if I say that a head and shoulders pattern is a reliable pattern to rely on, I should be able to go back and show you every time that a head and shoulders pattern occurred on the S&P 500 index and show you like the probabilities and everything like that. Like, even if you were to say my algorithm for determining that Head and Shoulders is there is the secret, you should be able to still, like, show me the historical performance of it and everything. I've seen one website where they have, like, technical patterns, but I think that there's a lot of question from his results because there's too many unknowns in how he retrieves those results for us to really say if they're like consistent and actually statistically significant or if it's just random chance. But so I make a video that's basically talking about that. And everybody's like, who tracks their trades? What? So this guy was saying, like, wait, how many? He said like 8,000 trades. How many trades have I taken this year? Let us investigate. If we look at all of my trades, I mean, all of my awful trading, to be honest with you, I've had some awful trading this, like I was doing pretty good throughout most of the year, and then just the last little bit of the year, it's been bad. So we got to go all the way to January 1st. And then come to December 31st, why? And if I take everything, which is pretty terrible on a graph there. Well, I had some good points. I had some good times, but and that includes like all of the sim trades. Oh, I've taken almost 2,000. Well, man, if they're taking 8,000, that's a lot. But yeah, you should track them. How do you not track them? Am I the only one? Like, or is everybody just as stupid? I don't get it. How could you be trading and not keeping track of your performance metrics? What is wrong with people? And then they're all posting in there like that's normal. Like, well, no, yeah, of course we don't track our stats. Who does that? What? Are these people for real? Is it just because it's TikTok? I don't know. I don't get it. Somebody help me out here. Explain this to me, because I just can't for the life of me imagine trading without having some way to see what your statistics, like how your actual trading is doing. Come on. It's just crazy. Right, hold on. Why am I getting... Oh, I got Christmas holiday trading schedule. It's like, why am I getting emails from AMP Futures? I don't use them anymore, but I guess I'm still on their list. Did you hear they sent the first meme coin to space? No. Not that I would really care anymore. I just want to see it burn. Just want to see it burn. Can we just let it burn? Dude, if we can get below 4,000, that was where that last little spike up came from, right? We can get below 4,000, and then below 3,000, and then below 3,000. You have to see. You have to actually see me rubbing my hands like, oh yes, then we could have some fun in Bitcoin, yeah? I had somebody was asking me about NFT stuff last night because they hadn't really looked into it. And I was like, I don't want to talk about NFTs. I'm just checking some of the headlines here and stuff. Oh, that's weird. Futures Trader 71 isn't going to do his live webcasts until the 23rd. Well, why wouldn't you just wait until next week? Well, but nothing's going to happen next week. You should just come back next year. I promise you. I know it seems scary, but I promise you they'll come back. Don't get your hopes up. It might not happen. Yeah, that chart was the futures in Bitcoin. So with it in the futures in Bitcoin now, you can really see how this was playing out, right? We had a rise that came just up to 20,000 and then collapsed, and then they shoved it up above that. We had another. This was kind of a little bit more of a pullback than a collapse with the way that one played out. Some of these were collapses. And then was it around May was when we had the really bad collapse. The thing is that we've had events that would normally cause collapse, like this right here. If this is kind of equal to like the 2017 crash in terms of like the initial impulse and everything, like normally that would have made it come all the way back. But it's almost like the cycles are just going faster now. Because I don't know, I just get it from my futures broker. Like I get the full CME data, so anything that's on the CME I can chart. But yeah, you know, this they're like pumping tether the whole time, by the way. So then we kind of get this spike up again. But here I think where it's like they got up into the 65,000 range or so, and it sputters out again, is like really concerning in my opinion. So here, let me present it to you a different way. What I'm seeing in Bitcoin. I'll generate a chart. We'll need to post some. I think that I need to move doing like the Patreon thing over to some sort of an email list or something. Like I would really like to automate the sending out of these charts, but because I might not have something to say about it every day, but people might still want to get the indicator regularly, if only so that it reminds them of it, right? 12:20. Still generating. But it doesn't work. You know what, Madi, it is actually like such a perfect example though here of where I have these problems with technical analysis. So like when we come back and we look at this, so I agree with you. When I look at it, I see a double top of some sort, right? But technically it's not, right? Because technically this level was below this level, right? So is it really a double top? You get what I mean? So like the thing that I find that is the most frustrating with technical analysis is that they purport it to be quantitative and it's not. They all of the followers of it think that it's quantitative, but it's not. Because at what point do you say the pattern has completed? What is the condition that has to be met for me to say, okay, the pattern is completed and now you should take it short? And when you actually go into how they trade it, these guys don't actually know. It's like, does it have to break the neck? Okay, so if it goes below 30,000 or 28,000, what's the exact number? 28,775. If it goes below that price, then has it kicked in and you're supposed to go short? But then they'll say, well, it's not quite that, it's a zone. And so then what is it? Like, how many ticks away from that can it possibly go? And then actually backtest it and show me that it's actually a probable pattern and everything, And then somebody else will come in and they'll look at this and they'll be like, no, this is higher highs and higher lows. So this is bullish. You see? Everybody sees it different. It's not quantitative. Everybody wants to purport that it is quantitative, but it is not in the least bit. Not in the least bit. Okay, so here's our chart of the Bitcoins. And I want to zoom in so that we can kind of see where price has been going here. So when we look at this run, come back and look at the blue lines. Okay. So what does the blue lines do? We get a peak and it comes back. Peak comes back. Last time around in 2017, we kind of had like a slight double peak, but it comes back. Okay. And then here again, the other one that we had in like 2019 or whatever, that one, another peak, right? And now we come to today, and what is it doing? It's like peak, like look, it did it like 3 times. You see it? Peak, 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 collapse, peak, peak. I don't know. And everybody's saying, just think about this. Everybody is saying, or at least all the people that are favorable to Bitcoin are saying that it's going to do this again, because they think that Bitcoin is going to bounce here. Although that would be kind of unusual, right? It would be unusual, except for that it did it recently here. So I guess you can't say that it's all bad. But you get what I mean? It's just like it's doing kind of crazy stuff over there in Bitcoin from like a blockchain perspective. So I found that this is a pretty good metric for like when we're overbought and over, like when we're in a a mania and it's going to collapse and everything. But yeah, that's kind of been rising, and this has kind of been rising, and that's unusual. And probably the best explanation for it is just that Tether's involved, but I can't say. I mean, I don't know what it's going to continue to do. Ding, 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 ding. No, it doesn't. The fact that it never broke just because you can look at a chart and you can say in this small cherry-picked time period that I'm looking at that it behaved that way does not mean that it's going to continue to behave that way, right? Like I'm saying, when you do this thing over 10,000 samples with your rules, how does it actually behave? Or maybe even better yet, 100,000 samples. If you could get 100,000 samples, would it work? Because every time that I do a kind of a research like that, it says that it doesn't work. It says what I see is I see some stats that people that aren't as sophisticated or don't look at as large of a time period would certainly be fooled by the randomness, but that it's ultimately randomness. Go back to the chart. Go back to the chart. Explain to me how come it held. I can explain to you how come it held, because people are printing Tether and using that to create buy orders, and the buy orders move the price up. That's the only reason anything does anything, dude. Well, I mean, not because Tether prints, but the only reason anything does anything is because of what the orders are doing. What is the difference between a DOM and the footprints? Well, a footprint is kind of more of a long run view of what the DOM is doing, okay? But the thing that you might not see in the footprint, this is such a good question. So the thing that you might not see in a footprint is, like, because you see it over the whole 30 minutes or whatever time period you're looking at, you're not going to see that, oh, hey, we opened up, and then when we moved down from 11 half, 11, 10 half, 10, it was only like a few hundred contracts at each swipe. Because if we come all the way back up there, then when you're going to look at them, you're going to see that, okay, like 5,000 traded there and 5,000. You're not going to see it. But when you're looking at it on the DOM in real time, you can see that the last time that it traded, they didn't put very much liquidity up there. So that's the thing that you can't necessarily see. When you're watching, so you got to understand that when we're talking about liquidity, think about two types of liquidity, okay? There is the resting liquidity, which is what we can see, and there is the latent liquidity, which you can only see as it's traded over a period of time. And you want to see, okay, they traded through that like, let's say here down at the bottom, if they trade down through that 8,000, okay, how much did it take to trade? Let's say it took 2,000. That means there's a decent amount of buying liquidity there willing to hold it up. Okay, then it ticks back up and it ticks back down again. And that time it's 500, right? And it does that again, it's 500. And then all of a sudden they trade through 7.5 and it's 500. Now we can see, oh, there's not a lot of buy liquidity. The buyer market maker isn't willing to put up a lot, because you got to realize, like, every time that this moves, right? Every time that price moves, the market makers have a decision about, okay, I can now add a bid here. Like we just ticked up, right? They have the choice to put liquidity at 09. And what you actually see there might not be as much as they're actually saying I'm going to take as a fill, right? And the only way that you're going to know how much they're willing to take as a fill is if they trade into it. So you don't necessarily see that on the candlestick. On the footprint. So I'm not saying that like footprint charts are useless or anything, but I don't think that it's a substitute for the DOM. Some people try and treat it like a substitute for the DOM. It's not a complete substitute. Now, on the split side, everything that you can see on the footprint chart, you can see on the DOM. It's just that, like, it's kind of hard to do that, right? You're not going to remember, we have limited attention span, all of those sorts of things. So they're kind of tools that work really well together to some extent. Yeah. Is it possible that you're too smart for your going good? No. You can never be too smart. The reality is that I might know a lot of things about the markets and how the markets tend to behave. So, for instance, this whole thing about the square root law of meta order impact and everything, like if we're getting a large meta order in a certain direction, then I can tell you how it's going to play out, because this, like, the square root law of meta order impact is something that you will see that applies to practically every move. The amount that it moves is runs in a square root of the size of the meta order over the total volume for the day. And this law, if you go through and you have like the exchange data and you run it, it will come out to roughly that formula every time, right? Now, can you actually use that to develop a profitable strategy that's going to make you money every day? If you're executing a large meta order, then it's absolutely critical information, isn't it? But for us watching things, it's only kind of useful if we know that a meta order is coming in anyways, right? Which you might not know. Similarly, we know that the market is more statistically efficient than it is informationally efficient, which means that there is a lot of things out there in the markets that aren't priced in. Like this whole thing that the Build Back Better plan, it didn't even dawn on me that a large portion of the market had their base case that Build Back Better was going to pass, and that when it failed, it was going to cause a market decline. That the chance that the high probability that Build Back Better was going to fail was not priced into the market. Market is not informationally efficient. Okay. And can you as a retail trader take advantage of those informational inefficiencies? Yes. But doing it consistently is a whole different thing, right? We can certainly identify that there are informational inefficiencies and that you as a retail trader can take advantage of them. But how do you consistently do it? That's super, super hard. It's super, super hard. And so you can be a super intelligent person and you can be doing absolutely everything right and still do absolutely dismal in futures, because there is substantial risk of loss in futures. I would say the fact that the market is down today is evidence that Build Back Better was not priced in, or rather that the failure of Build Back Better was not priced in. It's a perfect case study in how the market is not informationally efficient. They really should have seen that coming. Yeah, trade base. Are you saying that like you take the grounds and you throw them and see what kind of pattern they form, and then you make your trading decisions based off of that? Because that would be probably about as effective as technical analysis. And also, I'm not sure that I have a super high IQ. Like, everybody talks to me like they think that my IQ is 130, 140, but I'm going to bet you that if I took a test and my IQ is above average, that it's not going to be more than 110. That's what I think. But I'm not willing to go down to the Mensa organization and pay for a test to find out. I don't care that much. Like, actually, when I like start gaming it out, I'm like, okay, would knowing what my IQ is be beneficial or detrimental to my life? And I don't actually see how it would benefit my life, so I'm not gonna do it. Forex Live tweets Boris Johnson won't announce any more COVID restrictions today, but they're coming. Well, so I'm wondering if we're going to continue to see restrictions through December, maybe even a little bit the beginning of January. But then things stop. I think, especially here in the United States, Fauci continues to be like, we should let this pandemic live on forever, but the politicians are getting tired of it. In fact, I'm starting to get to the point where I'm surprised that Fauci hasn't been canned. Yeah. Not that I'm saying that I dislike him or that his information is unreliable, but I'm saying that the politicians are going to get tired of him because it's hurting the Democrat Party. It really is. Anyways, what we were talking about technical analysis, right? I don't have all the answers. I just know that when I go and I investigate the technical analysis, it's random. And I don't see anybody giving the kind of results that you would actually expect to be able to have if people actually knew that technical analysis worked. Fauci has reached a triple top, baby. Okay, so where do you learn to scalp in the DOM, and what should you trade in the DOM? I think too much volatile markets are bad for DOM scalping, right? Okay, so that's a good kind of a set of questions. So what you're going to notice, so there are kind of repeatable patterns of sorts in the DOM that you're going to see repeat over and over again. Setups that really cannot be chalked up to random chance, but what happens after those patterns does tend to be random. Or it's not reliable. It will like switch between markets and things like that. You might be able to develop a system where when I see this particular thing, and then based on all of these other small underlying mechanisms, you could use a machine learning algorithm to decide what to do in situations like that. But I think that a large part of why those kinds of patterns happen is because that's how they stir up liquidity, right? So it's kind of hard to win that game. So trying to come in and trade just off of the DOM, like it could be done. The robots own that domain now. Okay, we're not very competitive in that. So I think that what you want to do with the DOM is you kind of want to take it a little bit higher level. You want to come down and you want to say, what are some things that we can't predict? Well, we can't predict that if there's going to be more COVID restrictions that the market's probably going to sell, right? That would be something that would be very predictive of what future orders would be. You'd have to be relatively fast, but that's the sort of thing that would probably move all day and that you can probably make money off of. Is if something came over the squawk and they said, okay, the UK is now announcing that they're going to go into full, complete lockdown restrictions until March, right? The market would tank, right? So then at the beginning of the day, you can list down all of the different flows that you might think you'll see that day. So that could be one, flows that based on seasonality and current financial conditions and everything that you have models that predict will come. Or they could also be potential news events, or like, that economic numbers are going to come out. You can list out the different scenarios about how that economic number will come out and how the orders will respond to that. So you can predict the future orders, right? And then what you're going to want to do here on the DOM is you're going to want to say, okay, what kind of flow am I seeing right now? Does that line up with the flows that I'm expecting? So let's do that for today. Today, we're expecting to see a lot of unclenching flows. That is, there was a big options expiration on Friday. And so today we might see flows, particularly in equities, that match up with that options expiration. I don't know which direction it's going to be, but we could see some weird and crazy things happen this morning. Now, are we seeing that? Well, not yet. I don't think that we should expect to see that until the New York Stock Exchange opens. So I think that it's still an open question. But so far right now, are we seeing that in the DOM? No. In fact, what are we seeing in the DOM? We had a pretty strong move down on market makers pulling. And now we're seeing a pretty strong move up on market makers pulling. Right? So because this is a market maker dominated market at the current time in the treasuries, we might be able to devise some strategies and try and take advantage of that now, right? That's the best flow that we got is just market makers. I've never found that to be a very good trade for me, but we could try doing it and coming in and saying, well, it may be tilted to the upsides, so I kind of want to buy and sell the edges here and fade the edges. Could be. The good traders are gamblers with a slight edge. Well, if all you have is a slight edge, then you're going to find that your results are more random than your account size is able to handle with the amount of leverage that you're trading in futures. That's what you're probably going to find. So it's because when I go in and I do a back test on an edge where it's like I will have a 1 or 2% higher chance of something happening, it's not very good results. It's not what people are looking for, at least. Otherwise, I would be rolling in money right now, right? So, anyways, to review, you want to predict the flows are what you want to be predicting. Predict the flows, predict the orders that are going to come in. Use the DOM to confirm that your predictions are actually happening or not. And that's the way that I do it. And then there's all sorts of nifty things that we can see in the DOM. So that we can kind of look for to help us see if that's what's coming through. And that's what I've been talking about in my video. So there's some specific setups. There's some specific ways that you can enter that are kind of a little advantageous. And there's things like icebergs and everything. And then you can kind of look at those to judge what the current conditions are. And then based on the current conditions, you can look to see if that matches up with what is actually going on. And then, you know, when those things are happening, like particularly a large meta orders coming through, what does that actually look like? Because it actually is very, very, it really stands out what you're going to see. You'll know when it starts happening, you'll know. When it starts happening, it might be too late, but you'll know, okay, the trade that I expected to happen, now it's happening. I'm right. I need to let this ride. Yeah, well, you won't find a holy grail. Okay, so if you want to write an algo for the DOM, it's going to be a lot of work. So in NinjaTrader 8, I'm able to write some pretty basic setups using the DOM. Some that seem to exhibit some edge in backtesting, and not just backtesting, but like forward testing on sim. But they are extremely vulnerable to volatility shocks. Yeah. So the being able to deal with the volatility, and I'm not just talking about like when things get all crazy, it's just like even on a day-to-day basis, the volatility. I've been unable to figure out how to deal with that. That's why I'm trying to move over to some machine learning stuff in Python. But that's like super complicated. But I guess what I'm getting at is that you can absolutely write algos for DOMs. It's just, you got to know what you're doing. It's a lot of research and study and everything, and it's really hard. Like, just doing all of your research and understanding what the market is doing at the time and what the major narratives are and what is possible for flows that might come through that day and so forth. You put that effort into that, you're probably more likely to make money from that than you are from doing the algorithm perspective, just because the bar is so high for algo based trading. Algo trading is so much harder than people realize. Okay, well, the S&P 500 has opened up. The initial move that we've gotten has been down overall, I would say, but there was some pretty strong wicks along the way. So, and hence the treasuries recovering all of that downturn that they had from before. Now for me, I think I will add one right there. The higher end of this, where I'm expecting that there might be some more liquidity. And of course, if it goes through it, then I'm going to just be wrong, but I still have risk to burn. So This trade is probably going to end up in me. This sim trade is probably going to end up in me blowing out at 10,000, huh? No, I just wrote it all in NinjaTrader 8. So in NinjaTrader 8, you got the on-market data method that shows you when orders are coming in, and the on-market depth function that tells you when there are changes in the depth of market. And then you can take all of those depth of market changes and organize them into a data structure to represent the DOM. And then you can run statistical analyses and look for certain patterns and stuff in them. So like one of the ones that I look for has to do with just what is the balance between buy and sell orders on a rolling basis. What percentage of the orders are buy, and if it's over a certain percentage, then I expect there to be some sort of a pullback. Works pretty well, actually. Like it's a thing that happens regularly, but it has fat tails. There's some software courses for algo trading in Python, but they're very well. Most of what I've seen on the internet for Python, I think one of the difficulties with learning how to algorithmically trade is that most of the trading algorithm tutorial work that people have done out there is based on managing a large portfolio of stocks over a large time frame and not high frequency trading, unfortunately. So you're gonna have to do a lot of work yourself. But like that's the thing with anything with trading, right? Is that with trading, you're probably gonna have to come up with your own things. Like you're gonna have to make your own breakthroughs. At some point, you should be discovering something that it's like, well, this is something that would be useful to everybody, but I found it and it's for me. That's just the way it is. Well, the treasuries backed off almost exactly where I was kind of looking at, so yeah. I know. I like learning the programming stuff. Let me put it this way: it's easier to learn the programming than it is to learn the trading. Yeah, especially when you start to get into like advanced statistics and machine learning algorithms and stuff. Oh my. Okay, so 2,500 traded up there into 11.5, and the level 2 like wasn't phased at all. You say the ES is just screaming. Nah, I would say they're trading pretty volatile, pretty large range candles here at the moment, at least. Okay, so there was like some liquidity there at 11.5, and then they just blew through it. So there is definitely some strong market buying demands in this market still, and I think that would have to be in line with, yeah, I mean, there's been a lot of buying in the treasuries. There's been a lot of buying in the treasuries over the past like 2 weeks. So holy crap, what the hell? Somebody's showing a picture of like their heat map. Whoa, like everything is down. That's pretty ugly, man. Where can I get market data into my PyCharm? So probably what you're gonna have to do is you're gonna have to export it yourself. Like you're gonna have to have both sides of them have a socket or something like that and transfer the data. That's what I've been working on here in NinjaTrader. and I just only got it to work where I can transfer this stuff over, and now I have TensorFlow available to use, but I have like no clue how to use TensorFlow, so I'm feeling a little ick. Like I said, I screwed up on my medication for the Stratera. And as soon as I'm done with the stream, I'm going to be going to because I went to go and get it on Sunday, and they were closed. So they closed earlier on Sunday. So I didn't get it, and it's kind of making me feel woozy. I'm going to go to the I'm going to take a break real quick. I'll be back, okay? Okay, back. Oh, what is TensorFlow? It's a Python package. It's a Python package built by Google to make complicated machine learning calculations easier. And in particular, breathe. So I do weightlifting, and it's all about taking the weight from resting to over your head. So it does not take very much movement to for my body to kick into oh, okay, we gotta start phoning the blends. Just run into the bathroom as I'm okay. The kinds of calculations that it does in particular are like matrix math. It has a whole set of structs and everything to allow you to create matrices and perform operations and different kinds of mathematical algorithms on those matrices. So that's what TensorFlow gets into. So as an example, the way that the Google algorithm works is every page out there is given a rank, and the rank is based on who links to this page and what is the rank of their page. So how do you sort that out? Well, it's a multi-dimensional array with as many columns and rows as there are websites for that search subject, and then you run calculus on it to solve for all of the variables. So that's basically why they created TensorFlow. Yep, linear algebra. Yep, you're right. I had to take a whole class in school that was just on linear algebra. That was oh man, it was so hard because it was everything that you had to do in your regular calculus, all of the rules and dealing with LNs and exponents and all of the other different complicated things that you have to do to get integrals and stuff. You had to do that and solve it all by hand. And it was oh, you thought that solving that problem was hard when you were in algebra 2, or sorry, when you were in calculus 2. Now you have to do it 6 times in one problem. It was such a nightmare of a class. And then at the very end, they show, oh, except for that, you can put them in these matrices and solve them with computers. I was oh, that's why we went through all of that. Linear algebra will get you on the cutting edge of math. Seriously, it's rough stuff. You know what though? Statistics and probability and random processes is really complicated stuff too. I went through this book, man. I read the first chapter of this book, Fundamentals of Applied Probability and Random Processes. I picked this book because people said that it was designed more for self-study. Cool. Right down my alley. I self-study the first chapter and I'm into it. I'm okay, I can see how some of this stuff could be useful, etc., etc. I'm excited to go down into the exercises now and make sure that I understand the concepts and can apply them myself and so forth. But what I didn't realize is there was 21 sections in that one chapter, and each section at the end of the chapter had 5 questions. I was I should have studied a section, not a whole chapter, just a section, and then done the problems, because it was woo. Oh, you mean it's one of the most useful studies? Well, certainly it can be in computing, yeah. Not a lot of people in computer science really actually end up having to use it, though, funny enough. So I'm kind of excited to be getting to a point where, kind of might matter. So. But as I said, it's called Fundamentals of Applied Probability and Random Processes by Oliver C. Ibe. It's not the big one. There's these 2 other ones that are considered to be more comprehensive, but aren't very good for self-study. So I thought I would do this one first, and then maybe I would go and get one of those. Okay, so we're moving a little bit higher for the regular session in the treasuries. They're trading into 14.5. We'll see if they're able to get above 14.5. But that kind of market buying that we are seeing, it kind of took a little bit of a pause, but it seems to be continuing to come through as the S&P 500 declines. Oh, there you go, MATLAB. Oh, no, don't make me use MATLAB, please. If it really comes down to that, so TensorFlow is supposed to make this sort of stuff easier. I may switch back over to R, because I just find it so much easier to manage data in R. I think that's what makes it special. Is R is really the base of the R language is really just data structures to manage these kind of mathematical calculations, and then you just pass them into functions. MATLAB, no, it's terrible. Indexes arrays are indexed starting with 1. That right. When I heard that, I was like, oh hell no. Not touching that thing. No. Oh man. So the reason why it's expensive. So the reason why I have such terrible experiences with MATLAB is that all of the engineers at the School of Engineering have to take a class called Introduction to Computer Science for Engineers. Not for computer scientists, for engineers. And the language that they use is MATLAB, because that's the language that they're going to be using at their jobs. It's like MATLAB, right? But the problem is that they're using MATLAB, but they're trying to teach them like C and C++ concepts. So every time they come in, they would ask the computer science guys, oh, okay, how do you do this and how do you do this? And it was like, oh, okay, well, that's just a simple array, like how do you do a sort algorithm? Okay. Well, it's really easy. You do this, and this. But then you as a computer scientist don't know all of the little stupid intricacies of MATLAB that make it more suited towards math. So like it was a total pain in the butt for them to do anything. And that intro to computer science for engineers class was basically harder than the intro to computer science for computer science, simply because of MATLAB. So yeah, I'm not a huge fan of it. Morgan Stanley, our base case is Omicron will peak in 10 to 12 weeks with daily cases 2 to 3 times the Delta wave. If the current rate of new case growth deceleration in South Africa persists, the time to peak could be as short as 5 to 6 weeks. I don't know. I mean, it was a School of Engineering. They had a pretty good program. Well, they had a pretty good program for computer science, at least, and for electrical engineering. Man, electrical engineering is tough stuff. People that become electrical engineers, there's money in that. Let me tell you what. Well, so another thing is we need to switch our oil over here. So hold on, When is oil doing here? We got to go to February now. Oh, they're at 67. Well, that's not so pretty. Is that actually, where is that in relation to, let's come back to our charts here. I mean, it certainly, it looks like something that could just be considered a pullback after the bottom, but with the way that oil has been behaving, it wouldn't surprise me if it plummeted down here. I do think that some of the flows that we are seeing in oil are political in nature, and that the Biden administration is kind of coercing people into pushing the price of oil down. So could go lower in oil than it should. I think that was one of the mistakes that I made with oil from before. So, well, by the way, and the treasuries, with the treasuries at 131.15, I think 16 it wouldn't be unreasonable. There was a lot of volume there traded at 14.5, right? So they're getting quite a bit of a breakout in volume here. That doesn't bode very well for the S&P 500, but since the S&P 500 has opened up, we are down by about 10 to 20 points. It's just more like 15. Like, okay, so wait, 55 to 35. Okay, so yeah, so 20 points down. It looks like it's turning a little bit higher now, so maybe that just kind of chills out. Okay. Now I have to go back. Gus was saying, you were talking about informational efficiency versus statistical information, and you're saying, I think that informational efficiency has the power to create trends, longer term moves, but statistical will allow for scalps. Well, so if you can find a statistical inefficiency, right? That's the problem there, is that finding a good statistical inefficiency that's really going to last and be consistent for you is just so dang incredibly hard. I think that the kind of like let's just assume some people believe that Renaissance Technologies has edges of that nature. Okay. What Renaissance Technologies does is probably well beyond my understanding of math and probably well beyond my ability to take on risk and access products and stuff like that, right? It's just really incredibly hard to find them. Now, you are right in that informational efficiency could be more likely to create really strong longer term trends, but they can still become useful to you in day trading, right? Because if you can find that inefficiency and then identify a flow that is starting to correct the inefficiency, you can ride it, and those can be some of your best trades, right? Sorrentino ratio, dude, somebody was showing me this strategy it was like a Bitcoin thing where they were claiming a Sharpe ratio of 50. and I'm sitting here like, it's probably a scam. It really shocked me that they were claiming a Sharpe ratio of 50 without like even batting an eye. Like it was like, that's a normal thing. Like, hear me out. If you got a Sharpe ratio of over 1, you're doing pretty good. Okay, if you have a Sharpe ratio over 1, you could potentially think about selling that to people. Oh, you just touched on the subject just as I was able to catch up on your talk. Thanks. Thank you for coming to my TED Talk. But you get what I mean, though, Gus, right? It's like, it's not like looking for statistical inefficiencies is pointless. It's just, as far as I can tell, it's less effective, right? And probably we should try and make sure that we're completely in the know in terms of what the informational inefficiencies are before we should really start focusing on any kind of statistics and technicals. So, like, I don't know how you sort that out. I've certainly had times where all I was looking at was the DOM, and I felt like I knew exactly what was going to happen, and things played out just exactly the way that I expected. And I can't explain why it worked so well. And as far as I can tell, it's just random, you know? As someone who's trying to day trade and scalp, I don't care how much about how the S&P moves. Yeah. Well, but the S&P itself is super random, right? Well, I would say there's a decent amount of volatility coming into the S&P 500 here, but in the futures at least, the cumulative delta is very strongly buy. They actually have 10,000 contracts long here. I am going to try taking a long. Let's try managing out to 2 there. Give myself the option to add more risk if it goes down because I'm stupid and crazy, and you shouldn't do that, but hey. What's this from Donald Trump Jr. CNN is addressing a lot of minutia this week, but they aren't touching the pedophiles in their missed story. You would think they would want to explain that to the world, but I guess not. Maybe there are more man. I don't know if that's something that you want to talk about on television, though. You say you would wait. Well, I want to take one now just because that buying flow just looks so incredibly strong. I think we need to temper it a little bit with what we're seeing here in the treasuries. Although I think that at the moment, what we're seeing in the treasuries here, with them declining as low as 12 for a moment, is probably some very severe spreading. The 30-year just got absolutely slammed there when the S&P 500 started to get back above the open. But look at the cumulative delta here, right? They're like 10,000 contracts long off of the open. If the S&P 500 turns down today, it's probably going to be a spectacular down move. Because I don't think that you can have that much market buying and then not go higher, you know? %90 of candles close with at least one, so meaning that either the high or the low is in favor of the candle close. That might be the case. If the first few ticks are against that move, there's a good chance you'll be able to profit. That could be. I think that's something I've noticed. So I think that this might be the thing that stat is picking up on, is that like volatility and price seem to be related but disconnected. So if you're getting a certain amount of volatility, you know, you're getting candles that are like this, they're all like the same size, and then you get some sort of a move that slips up through here, right? But then the volatility still remains relatively stable, and so then you'll start getting candles like this again. So when people try and use these like moving average Bollinger Band sort of things, like as soon as prices moved up to here, it's like what happened over here is like irrelevant. So I would be more interested in what the volatility is and how wide each bar is likely to be than I would be trying to follow some moving average, right? And if you get one of those bars like that, then yeah, like if you get a move in one bar that's higher than the average volatility, then you're probably going to be breaking out to new highs or whatever. It's too late. Yeah, it's too late. Could be. But I think it's still potentially useful, because what you can come in and you can say is, well, like here in the treasury right now, you know, they're trading a pretty solid range here between 12 and 15, let's say, right? So assuming that there isn't informed trading out there, you know, if I prefer short, I'm going to very much prefer to be going short up in this kind of area and long down in this area. And I can kind of use what the natural volatility of the market is at that time to try and judge what the best locations might be. And that might help reduce the adverse excursion on you. Maybe. That's something that I think I've been trying to sort out what the best way is to test that and haven't been able to find a way yet. Okay, so we dropped down only 5 points. Still doing okay. I guess I should have done that here. And, you know, I just saw 50 and thought that was a nice price, but probably would have been better to build this position in the 45 area, huh? Well, I guess we could. Okay. Well, it gave me one contract. Okay. Oh, of course it moves lower. Yeah, it is still kind of bearish. Like I said, if today ends up being a bearish day, it's probably going to be a spectacular bearish day, yeah? This isn't going to be just like a small little decline and then, like, if it declines, it's going to be like an outright disaster, garbage, fire sort of a move, I think. For the moment, the flows that I'm seeing come into the equities are in line with expectations. So I think we're okay. Just a little bit more, please, sir. Please, I want to feel. Ooh. Blackstone has agreed to buy Blue Rock. You know what? That's just too much similar names for me. I'm not going to finish reading that news. My brain is just not sharp enough to be reading that sort of thing. Blackstone has agreed to buy Blue Rock Residential Growth REIT in a deal valued at $3.6 billion, extending its push into U.S. rental housing. You're long too. Well, this is either going to end up being a really great trade or a really dismally bad trade in the treasury, yeah? The 30-year is still kind of pointed down, by the way. We're getting some pretty aggressive steepening. I don't know if that steepening is good or bad, to be honest with you at this point. Our entire democracy is on the line. Squire fires on Manchin for killing Build Back Better. Okay, so again, when you hear the Democrats say that, the reason they're saying that is because they expect to be out of power in a year. That's why they're saying that. Their big one at 18.5. Ooh, yeah. Oh, I can't see it. It must have just moved. You shouldn't have told us because it just moved when we ticked up. It's like just outside of our visible range. That's curious. Think of high frequency algos in their inches. Unless I can like quantify it, I don't know if I'm really. So the things that I do look at order flow, the only reason that I look at those things is because I have like really good evidence to suggest that they're meaningful things, right? I really need data on if we're going to talk about something new. In order for me to want to spend my time on it, I need some sort of data to suggest that it's going to be worth my time. You know, because I just have too many different lines of investigation that I can look down and a very, very short attention span, right? Oh, Joe Manchin is speaking right now. Okay. Spider-Man gives theaters a glimpse of pre-pandemic. I'm surprised that Spider-Man film has become as popular or as highly anticipated as it was. I don't know. Like, there's still the deltas are still very much long, but that maybe it is hedging activity, right? Like they're buying the futures and selling the actual stocks or something like that. I don't know, man. That's a pretty what I think quite possibly the largest divergence in price and cumulative delta that I've ever seen. I wonder if we can do some sort of a study to kind of try and determine, like, when you get a divergence between price and cumulative delta, can we quantify it and say when that divergence becomes X much, then you want to reverse it or something like that? Or maybe you want to go along with it. I don't know. Maybe it tends to result in a more consistent trend. Seems like something that could be worth studying if we had data to suggest that it worked. That one I might have enough tools to be able to research. I just would need to find a way of quantifying the divergence. But like here again, the market orders are still, well, I would say through this drop from 45.50 down to 45.38 or so, the cumulative delta has been flat through that. So this is market making has kind of pushed us to here. It's only around expiration you cannot. No, I've seen it in all sorts of odd situations. Certainly do think that around expirations you're more likely to see it, but I don't think I've ever seen something this extreme. So I'm not sure if I should be like super scared about that or what. We also kind of have to wonder about this decline in the treasuries. So when we had the initial move down in the treasury, the dollar was getting hit pretty hard. But the 6J never came back. So the 6J is kind of up towards its highs, and it seems like they're following the 6J more. But again, there was like some really radical steepening, and the 30-year came back really, really hard. So there's probably more twists and turns in this treasury today than we've had. There's probably more to come. But also block buys often signal a reversal. Well, I've actually kind of tried to write algorithms to try and do that sort of a thing, and while there is a slightly higher possibility of a reversal at those locations, that's not a very good trade. It sure seems like it would be an awesome trade every time you go and you look at the chart and you're gonna see down at the low, oh look, there's a bubble. There's a bubble at the high. We should buy that bubble and sell that bubble. Sure, but when I actually program it, it says it's actually not that good. Yeah, he did. Okay, Manchin is saying that he made clear what kind of an economic package, how big it would be acceptable to him, which is true. So again, it's really weird to me that the market is freaking out about this because they should have known. They really should have known. Perhaps it's a little bit of maybe if we panic, it will coerce him to do something. I don't know. But I just can't believe that there was anybody out there that is shocked it didn't pass this year. It's just a semaphore or something. Well, yeah. But that's like whenever I try and test those sorts of things, and I'm like, okay, but what about under these conditions? This doesn't help. Maybe if we had a machine learning algorithm could figure it out for us, though. Right? But it's the same thing. Like the problem with those areas is that in order for there to be a big block order there, a big iceberg there, market orders would have to be hitting into them. And why did the market orders hit into them? We did not get a break of the lows. They touched the low almost to the tick. And it kind of looks like they could potentially fall through. But so far, no. Does seem like that the market may be responding to his speech, but that's just because they've all been told this morning that it was because of Senator Manchin that it happened. It's a pretty decent bull run here at the moment. Is it me or most people who are into trading ADHD? It's probably not most people, but there's probably an unusually high number of ADHD people in day trading, yes. I don't think that it actually would help them. I think that self-control and sound executive planning is going to be a really big help in this sort of a thing. And so it's kind of funny that some of the people that are maybe drawn the most to day trading are probably the least capable of doing it successfully. But since pretty much everybody is unlikely to do it successfully anyways, it's kind of like, oh, well, whatever, right? It's a pretty good recovery there. It's quite amazing that they were able to hold that low to the tick. Like they ticked into it on at least 2 different bars, but they didn't break through. But they still know that my limit order there is at 45.49, and somebody's like, no, we're not going to let it get there. We can't let it get that. Let Seth get that fill at 45.49 and reduce his risk. Come on. You can do this, boys. Is just like 6 ticks. That's all you got to do. And that's not even all that high within the range of where you were trading before. So it shouldn't be a big deal, except for that I'm there. No, why should I give credit? Because it happened one time. Guys like... Excuse me. Hold on a second. Like, are you guys like intentionally trolling me on this sort of a thing? Like, seriously. It's like I go through these big long monologues talking about what is like valid evidence for something and what would be good things to try and base your strategies on and bad things and my philosophy about where you spend my time, and then it's like, because something held to the tick at least one time, that must be proof that technical analysis works. Come on. I just want to stress you out. Okay, okay. Because what stresses me out is when I feel like that I'm not doing a good job educating, you know? It's like, why do people understand this? I don't get it. Oh man, it still haven't been filled. I'm telling you, the most effective indicator is when I have a limit order and I'm talking about it. It's like somebody's out there saying, no, we're going to make sure Seth doesn't get that. We're going to make sure. He does everything he can to try and make sure that I can't get my fills. Look at that. It was so effing close. Here, we need to clear the DOM above so that next time it goes up there, we can see if it was very close. Shouldn't have mentioned it. I know, right? Yeah. I mean, the thing is that everybody's going to get a dopamine hit from trading. It's just that, like, the ADHD people are, like, going to be seeking it out so much more aggressively, you know? But for those of you that might have ADHD, my recommendation is you want to find 2 or 3 things that give you a pretty consistent dopamine hit that don't involve risk. and switch between them so that you don't overuse it. TA did work into early. Well, so I've seen some okay, so one of the difficulties when we're talking about technical analysis from like a scholarly perspective is that there's a lot of analysis of technical analysis on daily charts and not on like intraday charts, right? So on daily charts, there were a lot of studies that kind of suggested that technical analysis might have worked through the first half of the century, but then when computers got involved in the 70s, that those edges were removed from the market. And I've seen that mentioned in more than one study. You know, for all we know, it goes down there and touches it to the tick just to try and convince everybody to go long, and then, you know, Ristophinia is the best kind of, maybe. I don't know. Something that should help you with dopamine is novelty, right? No, I don't think that the amphetamines make you react stronger to dopamine hits. Like what you've got to realize is that a person with ADHD just has less dopamine floating around there in general. So anything that makes them more sensitive to it, getting the dopamine gets a stronger reaction from their brains than a regular person does. So what you do is you take the medications to get more dopamine out there and running so that the neurons are firing more often. Aren't what algos do based on technical analysis, but just mathematically verified? Not really. At least the algorithms that I know get used don't necessarily use technical analysis. The one thing that I have seen out there that would be like very relevant to technical analysis is that when they're executing these meta orders, you kind of make a decision about when you're going to start executing it. And they basically will go through and they will analyze every possible time frame, like 1 minute, 5 minute, 1 hour, etc., to try and find a point to start it that would be the most noisy, to try and avoid creating any kind of a pattern that people would pick up on. So, like, the problem with these technical analysis sorts of strategies is that if it really works, you arbitrage it away, And then if it becomes popular, then it definitely gets removed from the market. And what gets left behind is just noise. So by the point that it becomes just noise, there's no reason, you're not going to make money from trading it at that point. So there'd be no reason for the algorithms to do anything. So like the market making algorithms, they are going to very much rely on things that I think we could very easily prove and that everybody here would agree is an edge. It's just that they're edges that we probably can't take advantage of, right? Like being at the front of the queue is an edge. If you're always getting filled every time you're taking one contract here on the S&P 500 and you're catching a little bit of it, you're going to make money, right? If you are following some sort of a correlation and you're fast enough to be able to pull your orders and everything when the correlation moves and everything, you're probably going to make money, right? And these are the sorts of things that they're going to base things off of. But then they also will very much look at the flow that's coming in. So yeah, the market maker can come in here and it can say, well, I've got a lot of people that are going long here, but not enough to show me that there's like some sort of large meta order being executed or anything. So I should probably start pulling my bids so that I can make money on all of the short inventory that I just picked up. And they do that. So in that situation, it's not any kind of technical analysis at all. It's just based off of like what it got filled. And so doesn't matter what the market does, it's always going to have done what the most optimal thing is, right? It's like you can't win in that situation unless you really know where it's going to go, right? The only way that you can win in that situation is have that same edge but be better, so be in front of them in line, be able to trade the correlation better, etc., or actually know which direction it's going to go for the day. You have to have some sort of edge that's highly predictive of where it's going to go on that day, what the orders are going to be like. And probably there are some people out there that are able to look at the options and everything and what people's positioning is and make a pretty good estimate about where we're going to go today. And those people could probably make money, right? That's how I would approach it. Now, as for the Mahdi saying TA did work in early 2000s, maybe on some intraday basis charts, there was some things that in the early 2000 works. I would also say that very much so in the early 2000s, that you could make money just from watching the DOM, and it was quite a common thing, and there was a lot of people that were really good at it. And a lot of what they were doing was, as it moved, being the first in line. And the reason that those guys aren't around anymore, of course, is because of the robots. Forex Live tweets Manchin doesn't sound like he will be in any mood to make a deal anytime soon. Yeah, probably not. Is the index going to react to that? Maybe. Good. They're still at the lows, right? So in 2021, where is the edge that retail traders have? Well, so I don't know exactly. But one thing that I can say is that based on the vast research that we have today, markets appear to be more statistically efficient than they are informationally efficient, which means that you're probably more likely to find an edge from understanding the market and the business and why people are making the trades that they are, rather than looking for some sort of pattern in price that you can trade off of without any kind of information outside of just what market historical data, right? So look for informational inefficiencies. So like the big piece of information today is that Build Back Better isn't going to get passed. Apparently, a lot of people in the market didn't know that was going to happen. So now, how far is that going to move it? I can't really say. But another flow that we know is coming in. Another thing that we know is coming in is gamma, right? I don't know how that gamma is going to sort out today, but gamma is a pretty big point to look at too. Do you think the Holy Grail exists? No, I don't. I don't think so. I think that something that you could compare to a Holy Grail could exist for a certain period of time. Let me say it like this. A Holy Grail that is popular and everybody knows about can't exist. You might find a Holy Grail, but you hopefully you're the only person that finds it, right? Otherwise, it's not going to be a Holy Grail for long. Still, I'm seeing a lot of tweets talking about Build Back Better and just trying to play the political game on it, which I just think is really kind of funny, honestly. Okay, well, so by the way, it's around 45.25 where maybe the indexes will start to panic a little bit more. So at the moment, like it's bearish, but we're still seeing, well, and by the way, as we're coming down here, we're seeing some pretty big absorption. So there is some buying the dip in this location. I wouldn't take that as predictive of anything. But if we're expecting to see buying flows come in today, I think that is in line with us seeing those buying flows that they would be trying to pick it up somewhere near the overnight lows. So do we know of any Holy Grail type stuff from the past that doesn't? Yes, absolutely. So like I said, being at the front of the queue is something that for a lot of people in the early 2000s was a Holy Grail and doesn't exist anymore because the robots came and out competed them for it. Certain kinds of correlations are things that were what you could consider Holy Grail. Now note something very interesting about those edges, right? None of those edges really involve making a prediction about something, do they? They don't say when you have this price pattern, that means that it's more likely to move this way than to move that way. They're basically arbitrage based trades, right? Flash was an edge. What do you mean by that? Well, so they did break the regular session lows by a little bit. It seems like there's quite a bit of rebound volume coming in here, but I don't know how far they're going to get. I'm going to bet you that sellers are going to probably try and short circuit that rally, right? Trump tweets were the Holy Grail. We made some money off of Trump tweets, didn't we? I'm telling you, like, you can definitely beat the market on some of these informational inefficiencies. It's just doing it consistently is really hard. You really got to know your stuff. And you've got to be selective. Like, you got to know when you don't know your stuff, which is something I really struggle with, yeah. I don't know. I guess the reality is that in many cases, on many issues, I've kind of just given up, right? It's like, maybe you can find something, but I've given up trying to find it. And I've just kind of reconciled myself to that what you do in futures trading is super risky and that you're probably not going to make money from it. Can you really say that all TA is useless, though? Well, so I certainly have never tried to say that all TA is useless. But what I would say is that the null hypothesis is that it doesn't work, right? That the base assumption, if we're going to follow a scientific process, is that any strategy is ineffective unless proven otherwise. Now, what makes technical analysis unique in this respect is that technical analysis makes claims as to being quantitative and being based on probabilities. And yet, despite all of those claims, they are not able to show us the evidence that the technical analysis has any efficacy at all. Like seriously, think about it. I think that the best way to think about it is with your traditional technical analysis price patterns. Okay. So if these price patterns are all based off of you're more likely to win in this situation, why doesn't everybody have those stats? Because it should be, if there's anything that is provable in trading, it should be that. And yet nobody bothers to go and prove it. Do you get what I'm saying? It's like you go and you create this strategy that should be the easiest thing in the world to show to people that it's profitable and it's successful, and nobody seems to be able to do it. So what can we assume from that? Does that disprove the hypothesis that technical analysis doesn't work? That doesn't disprove it, really, does it? But how much time and how many efforts are people going to go and try and prove it and be unsuccessful before we kind of say, yeah, it just doesn't work, right? But there's another side to this, and that is that there are a lot of things that are in market microstructure that we've learned about the way that markets work, in particular that orders are what moves markets, and that if there's an inefficiency in the market, you trade a certain amount of contracts and you will eliminate that gap. And we can show this is very consistent. You go and you trade the number of contracts, and roughly speaking, you're going to move price to that location. We can absolutely calculate that, and we've found models and everything that shows that this is an extremely consistent behavior of markets. So when we start putting those things into play, those things really, really strongly suggest that technical analysis would never work, right? Anything that becomes sufficiently popular is going to be arbitraged out of the market very quickly. And if it works, you're going to size up, and the amount of size that you can actually trade these inefficiencies isn't that large. So they're extremely unlikely to last for very long. If you did find one, like if you do find if you find a holy grail, you can show people that you have a holy grail. You should be able to show them, like, here's my stats and everything else like that. But I wouldn't tell them how it works. And I would be putting a lot of work into figuring out what the optimal size is to trade that inefficiency so that I don't tip off the market from my volume. Right? Okay, does your definition of technical analysis that doesn't work involve... Yes, absolutely does. So here's my definition of technical analysis: using past data to try and predict what future data will do with some sort of, it's not like in that one particular instance we should be able to predict what it's going to do, right? But it should be that we use the past data to show that if you continue to trade this signal into the future, that you're going to win 60% of the time, or whatever the deal is. Okay. And I say 60% because 60% is kind of a threshold at which, like, be pretty hard to say that that's random if you were winning 60% of the time, for instance, with an equal risk reward, right? But price action is kind of a very funny thing, because price action ends up being this word that, like, everybody agrees with, like, oh yeah, price action totally matters. But really, it's like, is just kind of another word to try and trick you into using technical analysis, right? Is technical analysis under another name. And it's also, in price action includes all of the other hallmarks of technical analysis, in particular, it claiming to be quantitative, but then it not actually being quantitative at all. Like, when you go and you read these books about price action trading systems and stuff, it's like a list of heuristics. It's not an actual, like, straight programmable strategy. Because again, if they gave you a strategy that was truly quantitative, you would be able to backtest it and people would almost immediately realize that it doesn't work, right? That's why you're never going to see that. You're never going to see somebody show you a robot that trades an intraday strategy and has good stats over the course of 4 years, and they're selling it to you. You might find somebody that they've been trading it for a while and they've made money on it, but that they're selling it, you're never going to find it. So there's another side of this. It's like, okay, my assertion is that technical analysis doesn't work, and I'm giving you a very clear, easy way to disprove my hypothesis, and nobody ever does it. Nobody ever does it. Why do they not ever just disprove that? Why don't they just come in and say, well, I trade intraday, and here's 4 years worth of stats, and yada, 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 yada. Never happens. Now, I almost always see fib levels work to show support and resistance. Do you feel that that's just because so many others are following the same fibs? So, like, here's the thing. How do you judge the effectiveness of a line? This is like the first problem of technical analysis, right? Is like, if I come back here and I say, okay, here's our chart on a 5-minute basis. Let's, like, really try and, oh, come on. Is it not going to let me zoom in? There we go. Oh, actually, you know what? Let's not look at it on a 5-minute chart. Let's look at it on a 1-minute chart. Okay, so here is a line. You can see it gets kind of drawn on. Oh, actually, they don't have it anymore. Okay, where my cursor is, there's a line. 45.34 and a quarter was a low. They moved up. They came exactly back to that point and then reversed. That's a pretty effective line, right? Because it came down to the tick. Now, you're expecting this line to hold, okay? So now here we come down to that point again. That line has now been breached by a tick. Do you say that because the line has been breached by a tick, that the line is now felt? Well, most technical analysis people don't say that. In fact, a lot of technical analysis people would say that, even though we moved through that 45.30 or whatever, if we now reverse and move up higher on the day, they're going to say, see, that line still held. It was the false breakout and then the line held, right? How do you judge the effectiveness of a line? Because the reality is this situation where it's just going to go to that price almost exactly every time, is just never going to happen, right? You're always going to have to give it like some margin of error. And then the problem becomes you're giving it so much of a margin of error that no matter what happens, you have a way of seeing in your head that it was a significant level. When really the reality is it's just too subjective. It's not actually quantitative. Their argument is that the line is a zone. Yeah, exactly. When I say that I want somebody to prove it, that would not necessarily mean showing them their edge. There's multiple steps of this, because to really truly prove it, well, okay, so like there's a couple of different theories and ideas about technical analysis, right? So I kind of would put it in tiers, but the first tier is this. The first tier is this: intraday strategy based purely on market generated data that is profitable, consistently profitable over 4 years on a risk adjusted basis. That is my qualifier. That is my qualifier. Why should people send their stats to you? Because you're on YouTube? It's exactly why. Like, here's the thing, TLA. Okay. I can go over here to Journalytics and you can see how absolutely shitty I have done in December. Every trade that I have ever taken is tracked in that system. I can't believe that there are so many people out here that don't have the stats from their system. Okay? If you're successful and you're doing this successfully using only market generated data over a 4-year period, how can you not have that information? It's literally sitting there a few clicks away for you to be able to do it. And like seriously, guys, think about this for a second, okay? You're telling me that there are people out there on the internet that have the ability to end literally hundreds of years of debate over this subject with a few clicks, and they're not going to do it? Are you kidding me, guys? Come on. Why wouldn't you do it? Why wouldn't you say, okay, yeah, you can be profitable, technical analysis, intraday strategy, risk adjusted basis, 4 years. I've done that. Here, I'll show you. Now I've proven it. That's all it would take. That's like literally all it would take. And nobody wants to do it. I do. I totally will. Listen, let me tell you something. If you're going to come into this stream and you're going to continually drive top subjects off topic or push things that are ultimately unproductive to the stream, I don't care if you leave. I'm not necessarily here to be popular. Of course, we are kind of like, well, we might not necessarily make money with this, right? But I'm not going to do this and just go along with what people say because I know that that's what's popular and that's what they would want to hear. I'm never going to do that. That's not me. And if it bothers people and they don't want to listen to it, I am 100% okay with that. I am not so insecure with myself that I have to please every person that is on the internet, and I am happy enough with my success on this channel that I am willing to take those hits, and I'm okay with never being a huge YouTube channel because I'm just not going to sell my soul to tell people and say things that I know are counterproductive. So were some people where their approach and things were just did not jive well with the stream. I hold no animosity to them personally, but if they don't want to come by every day, that's perfectly fine, and it's probably for the best. Yeah. Jalen says because usually nobody believes them when they show their stats. Yeah, well, but that's the thing is like. I certainly have seen people show me like some stats. Like people show me stats all the time. Like people show me a month's worth of stats. That's what I'm saying. I've never seen 4 years worth of stats. Seems like it's something that if you're really successful with it, you should be able to produce. But people don't. Now one of the things that's really interesting Like, think about CTAs and hedge funds, right? Because these guys, they're going to keep track of their stats and everything, right? And they do. But every time that I go and I look at the stats of these things, first of all, a lot of those guys don't do well either, right? A lot of those strategies fail. But of the people that are consistently profitable, I've never seen an instance where they said, "Oh yeah, we're totally trading intraday technical analysis day trading." I've never seen. Yeah, no, these are all demos that I have on right now. That one in the treasury. So what we're saying on that treasury trade is that we're going to give ourselves 10K worth of risk. So yeah, we can let that go quite a ways against ourselves. It's just for fun. So don't ever come in here and look at one of my positions and be like, "Oh, I should be doing that. Seth is doing this. I should." Wrong stream for that. Because I'm explicitly telling you, you're probably going to lose money doing this. Just to warn you. And if you're not losing money doing this, and you've been doing it for 4 years and you're not losing money doing this, then you should show us that. Of course, the next thing that I would ask is, okay, now prove to me that your strategy is really based purely on technical analysis. It would be even better. I mean, if it's truly based purely on technical analysis, we should be able to program it, right? But maybe you're not that sophisticated or anything. But at the very least, you could give us enough information to know, okay, yeah, he really is like, it's quantitative, and has very exact rules about how to behave in these situations, and he's not factoring any other kind of outside information like news, etc., into his strategy, right? Right. That would be like, if I was going to publish it in a journal, then that's the level of evidence that would be required to really truly prove it in the end, right? But nobody even does like the first step. And I really think that what it comes down to is that most of the people that you see on the internet that claim that they're consistently profitable, have a really low bar for consistently profitable. Like, they've made money this month, and so now they're consistently profitable. I've always thought that about TA, but that's why I go back to, it has to be used as an art. Well, that's possible. I mean, listen, if you're using TA and it's used as an art, and we can't back test it, it's not back testable, but you're very certain that you're not using news or any of that sort of stuff in there, and you really have been profitable for that. Like, let's just start there, you know? But what just boggles my mind is, why are people willing to spend so much time and effort on something? Like, it's not just like, the vast majority of retail traders use technical analysis, and a lot of these people are putting a ton of time and energy into refining their technical analysis, and yet we have absolutely zero empirical evidence that it's worth a darn. I don't get it. I can prove to you that news moves markets. There's many studies. There's these guys that are using market making algorithms. They've published it in journals, and they found that they can just use social media sentiment to predict the markets on a relatively effective strategy. Okay, and this is all like published and peer reviewed and everything, and nobody wants to use that stuff. What's with that? Explain that to me. I just can't understand that. You can get profitable by following simple tools. Okay, prove it. Listen, you're going to run into the same thing. You're going to make a statement, and the response is always going to be, okay, what kind of empirical evidence do you have to suggest that? Because when I say stuff, I don't just say it. You got to understand, these things that I'm telling you, I didn't just one day say, you know what? I feel like that it's just impossible to be successful at day trading, and that seems to me like technical analysis is just kind of bullshit. So I'm now going to become the anti-technical analysis person, because that's just what we've found is that's just been my experience. That's just the case. I don't do that. I'm not like that, guys. Okay. I'm only saying these things because I've been reading peer-reviewed articles and I've been doing quantitative research myself on these markets for decades now. And it's the only reasonable conclusion based on the best available information that we have. And when I make a video, especially when I'm making these one-off videos that you see on the channel, which make sure you're subscribed and click the bell icon. I'm not very consistent. I don't post every week. Okay. Usually I post them on Monday, but I don't post every week. But when I make one of those videos, the things that I'm saying to you in those videos, it's because I have evidence to suggest that it does that. Okay. So a good example would be the video that I made about catching the edge in icebergs. Okay. In that video, I just give a simple logical explanation to explain how there is an edge in entering your trade if you can catch the edge. If you can catch the edge, it is always to your advantage to catch the edge. If you're taking a trade and you can do it with an iceberg, it's always to your advantage to do it with the iceberg. Those individual things don't necessarily predict which direction it's going to go, but if you know what direction it's going to go and you use those things to get in, it helps. Okay. And you can know just by logically looking at the DOM. Okay. That one's really simple. The next things that I'm going to be getting into, I'm going to have to pull on research, and I'm going to cite papers and stuff, right? I don't just make this stuff up. And the difficult thing is just that there is actually a lot of information about how markets behave that is very well established. Retail traders never talk about them, but are very well established. I think the square root law of meta order impact is like a really good example. If you execute a meta order and you track your stats, you will see that square root law holds on a single instrument. It is incredibly consistent. Retail traders never talk about it. It's just that all of these things these empirical things that we've determined about, that we've found about markets, don't necessarily directly lead to a profitable strategy. In fact, they kind of suggest that you may never find a profitable strategy, right? That's kind of the problem. Knowing the direction is the problem. Yeah, I think so. Is order flow a better predictor than TA when it comes to being a profitable trader? Well, so I think that one could argue quite effectively that order flow is merely another facet of technical analysis. But I will say, when I go and I do my back testing, my order flow strategy has always performed better than my price-based strategies. And I think that matches up very well with what we know about how markets function. Orders are what moves markets, not price. Price is just the result. And if you're only looking at price, then you're missing a ton of information that would give you better chances of understanding what the situation is and making a good decision. So if I was going to be trying to do some sort of purely technically based automated trading strategy, I would highly recommend trying to implement order flow into it. But I have not been able to be profitable using order flow alone either. I've been much more successful when I've been trading off of news and the market is giving me good news trades, right? It's just sometimes you're wrong. Sometimes you're wrong. That's the problem with that strategy. Yeah. Order flow analysis is also TA, in my opinion. Past orders have done XYZ, so will future orders. Yeah. I think that that's very much true. At any time that you're trying to use past data to try and predict what the future data is going to do, and it's purely market generated data, I think you're treading on shaky ground. And it's basically technical analysis, and it's probably not going to work. It's not like such a setup like that can't exist. That's just, I haven't found it, and if it exists, it's very difficult to find. There you go. Things like order flow could improve your entry and exits. Yes, exactly. So if you can catch the edge, then your entry is always going to be slightly more efficient if you catch the edge when you're doing a single contract. Okay. And if you're combining that with a bunch of other things like an informational inefficiency that you might know, piece of news that you might know is going to come down the pipe, things like that, it's every little tiny bit helps. And in terms of technical analysis, I don't have a whole lot of evidence for this yet, but I want to do more research on it. It seems to me that if you are going to do any kind of technical analysis, that you should be doing it from a volatility-based perspective. So volatility is an empirical property of markets that's well proven. You don't think that news trading is profitable in the long term because the market will react to news in random ways? Well, I think that the way that the market reacts to news might appear seemingly random, but I don't think that it's random at all. I don't believe that the way that the market reacts to news is random at all. It's incredibly complicated. So I always say, you want to know what people's positioning are, and you want to know how people are likely to interpret the news and what their expectations were, and all of these, there's all these factors that I think you have to factor in before you even try trading a piece of news like that. And then even then, there's always going to be a very significant human element in that kind of a trade. But listen, let me tell you something, okay? If you have a bunch of money and you want to give yourself the best chance of increasing that money as much as you can, okay, the best option for you is to put it in an index fund. And you know what? With as high as the indexes are these days, that might not be such a great strategy in the next 10 years, but it's the best we've got. Having already have a bunch of money, that's the thing though, is that it really bothers me when I see people come into trading where it's really clear that the only reason they're interested in trading is the lure of excessive wealth coming from it. If that's why you're in trading, quit now, dude. Seriously. If that's why you're into trading, quit now, because you will probably become more richer by putting the same amount of effort into almost anything else. Okay? If you have a dead-end job, you don't really like your job, go become a coder. You put the amount of effort that we put into trading, into coding, you're going to make over 100,000 years guaranteed. Over $100,000 a year guaranteed. In the current job market. Seriously. With the amount of time that we have to put into day trading, and then 95% of us lose. Become a programmer, man. Trading is it's not easy money. Trading is a hard way to make hard money. It's the worst time to invest right now. It could be. I don't really know. Coding for anything. Hey, go and learn React. React is a pretty. They want a lot of React developers. They're paying React developers pretty good right now. React is probably a pretty good spot to start if you're looking to code. There's the Hill tweeting that Goldman Sachs lowers 2022 growth forecast after Manchin says no to BBB. I still just can't imagine why they were thinking that Build Back Better was their base case in their economic forecasts. I just can't believe that they thought it was going to pass. Coding for question mark who is paying. What do you mean? Dude, if you know how to use React, there's so many jobs out there for companies just building websites in React. It's pretty crazy what they're willing to pay for good and React developers is not that complicated until you get into really complicated web apps and concurrency issues and stuff. What's the supply demand for? Oh, I don't know. For the next 20 years is a good question. I think that it's probably going to take more than 20 years to resolve the supply and demand problems in the coding industry. There's just not enough people in the United States going into it. And I tell you what, if you're really like truly good at trading, you can be good at coding. This is probably a better way to go if you're looking for like a day job. You should rebrand to Programmer Seth and teach us all how to code. Well, okay, so there's a couple of problems with that. There's definitely a lot of room for you to, you become a coder and make money. That's what I do for my day job. Okay. Number two, there's already a lot of good YouTube channels out there for learning how to code. Okay. I'm not so sure what it is that I would provide through the YouTube video format that's not already out there for coding. Nor am I sure what kind of skills or what sort of things I'm good at with YouTube that would make me have a successful channel on that type of content, right? Like the thing that I have over here is that I understand markets better than most retail traders do. I mean, I know that's a really egotistical thing to say, but just from reading around, it seems to be the case that most retail traders don't know these things and never bother to look at it. So I am definitely giving them new information that would be very relevant to them, right? The other thing is that I just enjoy it so much. I enjoy it so much, and I've already built a really great channel out of it. So I can continue to just do this forever. It's just fine. And I did not make money this year, but I would just keep trying. The relatively easy barrier of entry could be a problem, but no, because I don't think it's actually that easy of a barrier to entry. Like the problem is like what I'm saying is with the amount of effort that you put into coding, trading, and anybody that comes to this stream with the amount of effort that you put into trading, if you put that effort into coding, you could probably make more money from the coding, right? That's still going to be like, a month of dedicated study learning to code and doing certain coding projects and stuff that most people aren't going to go through. But have you seen the crude oil fall? Yes, I have. Well, I mean, pretty much everything has fallen over the weekend, right? Oil is still going. They're back to 66 now. It doesn't look very good. I don't think that oil has to be, I don't think that any of this has to be like the end of the world. But we'll see. Now, it's about time for me to get going, isn't it? I think that I will just close this one in the ES for the end. Yeah, I guess since I'm thinking about ending the stream now anyways, I'm just going to take the loss. Here, let's try and get... Okay, so that I took my loss in the S&P 500. The win that I was looking for didn't happen. under other, if I had been able to get my short-term fills filled, then I maybe would have expanded the zone to be able to take more risk and everything and try and hold it longer. But I think that we were just wrong on that. Yes. And you know what? I wasn't really, that was kind of more of a, I just felt like doing something than it was that I really felt like I had a strong informational edge on that sort of a thing. I do kind of feel like that the market is overreacting to the mansion thing, but apparently a lot of people's expectations were very different from my own. So, and for the treasury, what I'm trying to do here in the treasury is supposed to be a very, very long-term trade, right? Like they're going to have to come up to like freaking, oh geez, with 5 contracts on, they're going to have to move all the way up to like 132 to stop me out of this, right? That would be like all the way back up here at the CPI. So if I'm that wrong, then I'm that wrong. But these are not trades that I would be taking on a live account. I'm really, it's this thing in the treasury is kind of really more of an exercise. It's, I've picked a direction. I'm trying to manage it on a very long-term basis and giving myself the ability to take on a lot of risk. What are the best ways to do this? And I think that probably what I'm doing here is not necessarily the most efficient thing. So I don't know how to deal with that, but for now, today, I don't think that it did anything too interesting on that front. And here again, like if it does come back down, like we come back into profitable very quickly, right? So coding is easier for, I don't know. Anyways, but I think not only do I know a lot about markets, but I think that I'm pretty good at just following what's going on the news and stuff. Yeah. I think that's a big part of why a lot of you guys watch this. So is for those reasons. So even if we're not making money from the trading, we're just going to continue to try and do the trading, or we're just going to keep doing the thing. And yeah, probably, we're going to try and make money from the indicators and the stream itself. There's nothing wrong with that, especially if I'm providing a product that people need and is useful to them. And the things that I'm giving to you are things that I do know are things that are useful. I wish I could say that I knew that they would make you money for sure, but that's just the way the market is, right? And you know what? You guys as an audience, as we were talking about earlier, there are some people that aren't around anymore. And you know what? That's okay too, because another thing I should have said on that is I don't expect you guys all to want to watch me forever, right? There should be a certain point at which you've done this study and you know everything that I know, and maybe listening to this stream is boring unless you really jive with my personality, So there's always going to be a certain amount of people that they're going to come and go. That's fine. But you guys here are here like every day. Like most of you really do come in every day. It's like the same people every day. I was not profitable in December. No, certainly not. Were you? So again, the challenge here is show me 4 years worth of stats. Gus says, yeah, you know what, Gus? I've been so impressed by the effort that you put forth. Like you should know that it is that you put forth an unusual amount of effort, and that you should really keep that up, because that's a big advantage for you. Most people don't put in that much work, ask that many questions, and etc. etc. You're different from other streamers because you don't attract viewers based on you being profitable. Well, yeah, that's probably true. I mean, here's the thing is that if you're going to make your stream about you being profitable, then you're always going to lose those viewers at some point, right? Like that has happened to a lot of these guys that stream, right? they were really popular for a period, and I mean like really, really popular. They're still more popular than me, but there's some of these guys that were crazy popular, and then a month or two ago they blew up, and a big portion of their audience stopped watching because their whole thing was that they were a profitable trader to follow, right? But like here's the thing. Here's the bigger thing is that when I am making money, like I am doing, obviously you can tell because I'm in much better mood when I'm making money, right? Today, just remember these I'm not feeling very good today. So these trades were more me screwing around for fun than even normal, okay? The funniest thing is when they blow up their accounts. Oh, well, is it funny when I blow up my accounts on stream? Like when I lost $1,000 on oil, was that funny? I don't know if it was or not. Usually those streams have like a lot of people that watch, but not this time around. But yeah, it's definitely happened. They stopped being profitable and a lot of their audience left. And then what really happens is that then people get into this mode where they kind of have to lie to people about how they're being profitable to keep their channel going, which is not a place you really want to be, is it? No. Whereas over here, it's like I can be as awful as possible, and it doesn't matter, you know, because we're about more than that. And the crazy thing about it is that, like, if I was making money, I wouldn't be telling you guys, or I wouldn't be using how much money I made to try and promote the stream and say, look, see, I make so much money. That's why you should come and watch me, because if you come and watch me, then you'll be profitable too. You guys know I would never say that, right? If the more profitable I am, probably the less I'm going to say about my performance. Right? Which is probably the opposite of what you want to do if you want the stream to be popular. But to help you guys, it's the best thing to do. Because if I started to tell you I'm doing well and start to make that argument, now I'm completely undermining the whole thing that I've been telling you, which is that you should try and base your trading off of the best available empirical evidence. If I'm going to teach you something, it shouldn't be because this is what I've done and this is what I've found to be the most effective. I'm telling it to you because I believe that I have empirical evidence that suggests that this will be a useful piece of information for you. Wouldn't you rather have that? Wouldn't you rather have that? Something that you know for sure. You don't have to rely on, is Seth telling me the truth? Is Seth really that good of a trader? No. You can go and you can look at the empirical evidence and you can determine how useful that piece of information is for yourself. Why doesn't everybody do that? I don't understand. Maybe it's just that the allure of being popular by telling people what they want is just too much. I don't know. It's not about the profits, but the friends you make along the way, right? Well, but now there's another side to this, though, that I do have to be honest with you. I do really feel like that I've been getting better. I think that I still make really big mistakes. And every time that I make a big mistake, that's kind of something that I put back in my mind and I understand that situation better and I don't make as big of a mistake on it, right? So like here in this situation, right, in this market right now, I really screwed up on that oil trade. That was a big mistake. But another mistake I've made when it was 2018, I did really, really poorly. And I remember that and how that went and what it was that I wish I had done. And so I've really backed off from trading the live account very aggressively in this environment just because I knew what it was going to be doing, right? So I do think that it's inevitable that at some point we're going to be doing pretty good. I don't think that I'm going to become a millionaire off of it, but I do think that I can get to a spot where I can make a few $1,000s a year from it and it'll be fun, right? And I think that that's inevitable, that that's going to come, just because we've learned so much and we've done so well, and I really feel that we're miles ahead of a lot of other people that are trying to do this sort of thing. And I also think that it's inevitable that the YouTube channel, that we're going to do something in the YouTube channel is going to blow up. So And then that will just, when that happens, that just means that we'll have more resources to be able to put into chasing information that we can prove will be useful to you. Right? It's going to happen one way or another. Sometimes I'm really discouraged about it, but then I look back at the past year and I'm like, we've done really well this past year. And this year was like a bad year for the YouTube in many respects. And we still did pretty okay. And we still have some of our best content yet to come. And I've got some stuff, like I'm getting a new camera that should really help the channel out a lot. And it was kind of a big leap to purchase the camera because it was a lot. But I have no doubt that we're going to make all that money back. I don't know if I'm ever going to make all the money back that we put into trading, but I do think we'll make the money back that we put into the stream because I think the thing that makes me the most confident about it is that I just have such a great audience, right? Nobody else has such a dedicated and informed and intelligent audience. I really have never seen it. I see lots of people that, they have lots of people and they screw around, but and I'm not even just talking traders, just like streamers in general, but like people that are really here to learn and try and get better at something that we all know it's kind of a questionable thing if you're ever going to make money from it, but you just love the market like I do, and you're willing to always, because seriously, like if I was banned from trading, like they said, you're just so terrible at this, we're not going to allow you to submit orders to the CME anymore, I would still be sitting here on a DOM trading sim. No joke. You're wrong. I'm pretty dumb. You know what? Hey, if you're pretty dumb and you understand it, then you're still leagues ahead of most people, dude. The hardest thing to overcome in trading is definitely understanding where you're really at, right? Like I can sit down and I can see that all of these people behind me, but I can't really see where the top of the peak is, I just know that I'm at a spot where statistically 95% of people have already given up. But the thing is you guys all ask really good questions. Like, if I make some sort of an assertion, you never just take it for granted, right? You always prod me and force me to come up with, articulate myself well, and then the question stop that usually means that I feel like I did a good job explaining it, and I don't know. Anyways, guys, this week we should be having fun. I don't necessarily want to be taking a whole lot of risk this week. And frankly, until like what's going to happen, January is going to come. We're going to get some volatility with like jobs numbers and things like that. And even in those, I think I'm going to trade, but I'm still going to be very cautious. I want to let everybody else just expend all of their ammo is what I'm trying to do right now. So while we're doing that, it's a good to discuss and to have fun too. We had a decent amount of fun today, didn't we? But I'm not myself. I'm not as serious as I normally would be. I'm not as dialed in, as focused, if you can't tell. But it is time for me to go, and I'm sure the pharmacy should be open because I just feel like shit. It makes me feel awful. So I'm going to go and do that. And we're going to come. I bet you it's going to be funny now that we quit the stream. They're going to go back up to 45, 50, and we could have just been. If you can be like this every day, we are good. No, probably won't be like this every day. What you're seeing is me being much less controlled, right? Okay, what should we call the stream today? Markets. Well, we should talk about Mansion. Markets apparently didn't know BBB was a no-go. That's the best I can come up with. But that's what we got to talk about is the Mansion. That was the day. Okay. I'll see you guys tomorrow. We'll see. I'll be here tomorrow, Wednesday, Thursday, and then Friday it's a holiday, right? And then all next week, I won't be streaming. I'll be around. You can contact me in Discord, but we won't be streaming. I will be using that extra time, to do other research in the morning. I'll be working my regular job next week too. So, okay. Stay profitable, friends.